energy markets have recovered quite a bit last week and ended the week at a really important resistance level. So now the question is, will the bulls continue higher, or was that it and the overall downtrend continues? Hi, my name is Marcello Colax. I'm the managing director at Clever Markets, and I'm going to walk you through the charts for the week starting 25th of August 2025. All right, without any hesitation, just here the disclaimer. So of course everything that you see here is not trading advice. It is just my humble opinions on the market. Every week I'm asking my LinkedIn network where they think the TTF front month is going to go next week. We had more than 150 respondents. The results are in, and it is nearly unchanged from one week to another. We can see that the bulls are still making up half of the market sentiment. Then the bears are represented as a quarter of the market sentiment, also unchanged, as well as those who think the market will move sideways or have no strong opinion on the market. This has also been unchanged. Now, although the sentiment is the same, the market environment has changed quite a bit, and what that means we'll have a look at in just a second. Now, this is part of the dashboard that our clients are getting this morning. This shows us that the up leg you have been observing last week is best traded on the hourly charts all across the TTF and NBP and German power markets. Best traded on the hourly chart, whereas the daily charts are still rather neutral. So right now this is just an up leg in an overall neutral market, at least for now. We do see first signs of bearishness, but we'll talk about that just in a moment. So you can see we have the TTF and NBP front month charts here, the TTF and NBP front season. We do have EUAs, we have German power, where you go. There, German power. We do have the Henry Hub that is still continuing lower, and we have Brent that is just recovering marginally. Okay, so here one thing I definitely want to note is that we have had this sideways range all across the markets and was very firmly established. So you can see that except for the NBP front month, all other markets have since then started to post a flow of lower lows and lower highs. So overall this is looking rather bearish in the grand scheme of things, going back to June 2025. Here we can see on the EUAs that the market is still rather sideways. So we started out with this really wide range that has now narrowed. So this here is most important for traders. And if you're wondering, hey, what to do next, get your clues from the hourly chart. So here the daily chart is just giving us broad hints, but it's the hourly chart where the current trading decisions are best made. Okay, let's start with the TTF front month. So I want to right away go into the daily chart because the weekly chart isn't really offering us any new clues right now. We are still thinking that the market is more likely to go sideways before eventually continuing lower. So let's have a look at the daily chart. You can see this is the rectangle that we are working with. That is in the, let's call this like in a 32 and 36 range. It is this rectangle here that last week was broken lower, and I want to walk you very quickly through the thought process and how we have been updating our stance on the market. So we were rather neutral within this range, and if we have, as you know, if we are on a sideways range on the daily chart, then we are trying to trade the intraday swings on the hourly chart. This is also in line with the Clever Markets methodology. So in our technical analysis playbook on page 65, you see exactly this: best practices for mean reversion strategies in a sideways market. So if the daily chart is giving us a sideways range, then we don't trade this on the daily chart, because here we are just confronted with a handful of like green candles and red candles, and the color of the candle changes quicker than we can react to it. So, and if you hear me say this all the time, if our trading strategy starts depending on guessing the color of the next candle, then the time frame is too high that we are in. So what do? We zoom into the hourly chart, because here we are dealing with actual swings where we can trade this range. And that's exactly what we did for the longest time, right? We had on the daily chart, this is like a picture book example, we had this range here, so there was no good trades to be had, so we moved out into the hourly chart, where we are now dealing with the flow of lower lows and lower highs and higher lows to actually trade this sideways range. Now back on the daily chart, we saw that we got one firm close below 32, below the sideways range, and we were then assessing that the market could actually continue lower, because look at this, back then we saw that the MACD was picking up, so bearish momentum was on the rise. We didn't get any sort of bullish signal from the stochastic, so it's also fairly bearish there. We also see that red was well above green, while the white line is moving higher on the DMI, the directional movement index, so it's simply meaning that a bearish case is building. And at this point in time also we saw that the 8 and 12 exponential moving averages were still pointing lower, so everything looked good for bearish continuation, and that's also what we wrote. Then on the next day, on the 25th, we saw this bullish hammer candle pattern forming. This is usually a bullish reversal candle pattern, but as you know, candle patterns, they work out around like 50% of the time, so they're sometimes worse than a coin toss. So this in itself is not a bullish signal, but we can increase its bullish conviction if we get a few other things aligned. So for that, I want to go back onto the Clever Markets playbook on page 131, where we go universal guidelines for candlesticks, increasing the likelihood of a candle pattern working out, right? So here we did have the hammer. Okay, so what do we actually need to look at here? What do we need to confirm? Well, first of all, did it happen at an important support level? Not really. So the important support level was up here, but down this here, this is really nothing. Do we get a bullish oscillator signal? No. Back here, even at this candle, the market was still firmly bearish. We didn't get any sort of bullish stochastic signal. What else? Was the volume high? No, the volume was average, below average, but nothing special, like really no special volume here. Was the candle pattern confirmed? So confirmation simply means we need a daily close above the high for validation, for bullish validation, and we need a daily close below the pattern for invalidation of the bullish pattern. So at this point in time, our stance was still eventual downside continuation, because that's what the charts essentially told us. But as you know, it's always good to keep an eye on the hourly chart, because here we are dealing with actual swings. So for quite some time we had a bearish channel here, and we saw that on the 18th, on the 19th, on the 20th, the market started to push sideways. So we didn't see a follow through of this bearish channel that we had still back then. So the market was essentially flatlining, and we saw that the MACD started to push a little bit higher. We saw that the stochastic started to push a little bit higher. We saw that on the DMI, the red line went a little bit lower, so it's a directional index minus, and we have the directional index plus, which is bullish. We didn't get a bullish crossover yet, but the bears were definitely dwindling away, and the bulls were slowly gaining control. And we also saw that at this point in time, the 8 and 12 exponential moving averages were a little bit useless, because they started to move sideways, but definitely not bearish. So we were kind of wondering, let's be a little bit careful, but overall we still think that downside continuation is still more likely, because that's what the daily chart gave us. Then as soon as we started breaking above this 31.46 euros per megawatt hour, the validation level of this hammer, we also saw a bullish stochastic signal, and we immediately pushed up against the old support rectangle, which was then offering resistance. And we saw that a lot of the market, you can see here, started to turn marginally bullish, and we also saw that the market on the hourly chart started to push towards higher highs and higher lows. So at this point in time, we acknowledge that upside continuation seems more likely. Back then we also got a daily close above the 23.6% Fib retracement at 31.51, which also signals that now we actually do have an up leg going on. And you can see within 3 candles the market recovered towards the 61.8% Fib retracement. And that is where we are starting the new week on the 25th of August. So you can see here the market has pushed significantly higher. The market last Friday, the last peak wasn't as high anymore. You can see we had this unprecedented gains, really strong marginal correction, and boom, the bulls didn't really manage to push any further. So that's why, just for safety reasons, we put on these Fibonacci retracements with a 0 up here and the 100 down there, simply getting us ready for the alternative case of the market correcting lower. So we would know that we have a downside correction going on if we get an hourly close below the 23.6% Fib retracement, and then we would see the market probably correct lower at the maximum towards the 61.8% Fib retracement at 31.6, let's call it, before the bulls potentially still continue. But for now, we are still retaining an overall bullish stance. We might, if we remain above 32.88, then the bulls will more likely continue. We see, now making you aware of all these things, right? So we see that we didn't really make a new peak. We saw that the MACD started to top out as well. On the stochastic, we did get this reaching failure, so we are making a first lower peak in overbought territory, which is preparing us to move below the overbought territory, below 80, which would be a bearish signal. I won't pay too much attention to the really high volume because it was the last hour of the last day of the week, so people were probably just closing out. But overall, we are seeing that the bullish momentum or the bullish strength has been somewhat declining. So yeah, I honestly think that the alternative case, like a little bit of a corrective move, is not completely unlikely. But for now, we still remain bullish until proven otherwise. So what would that mean for the daily chart? Look at that. So we marginally closed above the daily chart's 61.8% Fib retracement, right? Remember this here. 100 up here, 0 down there. We marginally closed above it. If the bulls can retain this strength, which I think is unlikely on Monday morning, then we would be pushing back deeper into the middle or past the middle of this old rectangle, and the daily chart remains neutral as long as we are within this rectangle. The bulls would only be fully in charge above 36. Now you can see the daily chart's alternative is a sideways market a little bit, which on the hourly chart means this marginal correction that we see, right? So what looks like a deeper correction on the hourly chart is just a blip on the daily chart, essentially. All right, so in summary, for the TTF front month and front season, as well as the NBP front month and front season, and also the German power front year, the corrective up leg that we have been experiencing is now encountering a very strong resistance. We need to keep an eye on the hourly chart to see if the market will continue higher or not. If we do get a corrective move lower, then the bulls still retain a chance of pushing higher again, but zooming out, it's all just a big swing within a sideways range that's been active for a couple of months. The bulls would only be in charge, the daily bulls would only be in charge above the rectangles, and the bears would be given a chance if we actually top out right now and start making lower lows and lower highs. If you're not already subscribed to the newsletter, then do so. You all have a good start into the week. See you around, and bye bye.